Rents themselves have been fairly stagnant. They haven't moved much.
Okay.
What has moved is the net effective rents. The rents after you factor in tenant improvement allowances and brokerage commissions and free rent. That number has gotten hit substantially. The amount of landlord work has also increased. So as part of making the deal, there's tenant improvement allowance. There's also the work that the landlord has to do in terms of capital expenditures to make the buildings leasable.
So take, for example, at 1345 Avenue of the Americas, which those of us who have been here for more than 15 minutes call 6th Avenue. Paul Weiss, big New York City law firm, just took, I guess, a 15-year, 143,000 square foot lease. So is that new space? Or are they just kind of repositioning space? And what did you have to do? Did you have to put in pool tables and ping pong tables and all that kind of silliness?
I wish it was that simple, Paul. First, it was 765,000 square feet. We had a 1 million square foot vacancy facing us in 2025 with Alliance Bernstein moving out to Nashville.
Oh, that's right.
And so, you know, before the pandemic, we actually looked inside the portfolio because we knew that we were competing now not only with our comp set, but also with new construction. We had seen millions and millions of square feet of new construction that we hadn't seen since the 60s.
Oh, wow.
And so we knew we had to invest and reposition the portfolio. And so we did so, and then, of course, the pandemic hit. And so in the middle of repositioning these assets with massive amenities, like we see here in this building, we also had to modify our stance and start COVID-proofing the buildings. So we did HVAC work, a touchless experience, Bluetooth technology, all of that stuff that we hear about, we incorporated into our portfolio. And the result was, you know, while again, we said that rents were fairly stable, it was the amount of work that it took to get Paul Weiss in. So it was not just what we saw in the deal itself, but what we had to do to reposition the building to get Paul Weiss to look at it.
So was that a healthy commercial real estate market? Is that an investment cycle? Like, how would you then describe it?
Well, you know, again, we're looking at a bifurcated market. So, you know, we're competing with other Class A assets. And so we, long before the pandemic hit, we just knew what we were going to have to do. There was a stat that came out years ago that almost 60% of the market was over 60 years or older. And so we fell into that concept. We fell into that grouping. And so it became very, very important for us to reinvest in the portfolio. And I think you'll see that those who have reinvested and spent the capital expenditures necessary to reposition their buildings have had some activity, and those who haven't have not.
One of my first Wall Street interviews was in Park Avenue Plaza, the old First Boston Corporation, back in the day. And I was like, oh, this is a real office.
This is a real place.
Yes, it does. Yes, it does for many reasons. What percentage of New York City is A type of quality?
Gee, that's a tough statistic.
I mean, it's a 10, 20%. I mean, it's not 50%.
No, it's not 50%.
So it's less than that. So I'm just getting to the question. Bloomberg News, I referenced this article many times. A year and a half ago, 2 years ago, Bloomberg News wrote a story about 3rd Avenue, Times Square, to right where we are at Bloomberg's headquarters here at 58th Street. What do you do with that inventory? Because that's not A inventory for the most part.
No, it's not. If you look at the submarkets, you can kind of look at it from that perspective. Park Avenue, 6th Avenue, these are the hot markets. These are the hot places that a lot of deals are going because of the flight to quality that exists when market conditions take a little bit of a stumble. What we've seen is we have a building at 605 3rd Avenue which straddles 2 submarkets. And so, you know, look, it puts everything on the table. We've even examined the possibility of conversion to residential, which, you know, again, takes a lot of resources to do. So that's something that we've discussed. I don't think it's going to be relevant to 605, but again, you know, it's looking at the market in the form of submarkets and what is happening, and you can see the data, you know, where most of these deals are happening are along those markets.
Sorry, go ahead, Paul.
But I guess my question is, just pick a building out of thin air on 3rd Avenue, the Lipstick Building, because maybe some people who are out of town can think about that building. That's what we're talking about. If that were to trade hands today, 50% discount from pre-pandemic?
Just about, I would say.
Wow.
Pretty close.
That is
40.
amazing. That's, to
40%.
me, we haven't seen that market clear, have we?
No, I don't
But
think
does it
so.
have to?
It has
I mean,
to, because
but, like, is someone going to sell the building tomorrow?
the loans are coming up to be refinanced, and they have to do with a higher interest rate environment. So a lot of hands are going to be forced in the next couple of years, don't you think?
I think, yeah. I think you're more likely to see in a lot of cases, workouts where there'll be more equity required, to be invested back in. There'll be stricter covenants, more leasing reserves and reserves in general. I think you'll see that rather than the keys being handed back. And if it's a B or a C market, you might see residential conversions be discussed. I think, it's going to depend, in relation to that, it's going to depend a lot on when the loan matures as it relates to lease expirations.
Yep.
In terms of your reinvestment, the equity you have to put in, are you done in that cycle, or are you still putting in a bunch of cash to update all your stuff?
No, we have repositioned our portfolio. And I can still eat, so that's
Yeah.
good.
He laughs at himself when he talks about it.
We have made a substantial reinvestment, and the results are that we have leased.
But that cycle's done for you.
For us, yes.
Yes. Okay. Do you feel like others are they also starting to do it now, or do you feel like for everyone that cycle is done?
No, I think it depends again on the asset and the submarket. You got to be very careful about the amount of money. You have to do it surgically. You can't invest the same amount of money that you would put into 1345, say it's 605, as an example. So I think there'll be some buildings yet to be repositioned, and there'll be some buildings that have gone through the cycle.
Would you, I don't know if you have a speculative part of your company that says, I'm going to go bid 30 cents on the dollar for this building on 3rd Avenue, because I think at that valuation, even if I have to put money into that building, I can make a good return. Are you guys thinking about that, or are you just kind of focusing on your core portfolio?
No, I think we have enough to focus on right now. We've actually developed over the last couple of years about 1,200 multifamily, with 300 yet to come down in Wynwood, Miami. We're developing that right now. I think as far as we are concerned, we also have a major immersive retail experiential development in Las Vegas. That's plenty for us right now.